In rising financial markets, the world is forever new. The bull or optimist has no eyes for past or present, but only for the future, where streams of revenue play in his imagination.
When DTCC acquired Securrency, which was a firm I was running. So that's our ambition is to tokenize the U.S. markets, and we're working towards that objective.
In the past, I've made content regarding DTCC, and this is the Depository Trust and Clearing Corporation. Simply put, they're like the Federal Reserve of stocks. So the stock market has to have an issuer. There is an entity that issues stocks on behalf of each of these corporations, and it's the trust behind the stock market. This is mostly the US markets, but they are the ones that are writing all of the stock certificates. DTCC purchased a company called Securrency, which is this blockchain based project that is working closely with the Stellar Development Fund. Now, DTCC is going to have an array of different processes that are going to tap into blockchain. It won't just be one specific platform, they're going to be layered and integrated into many platforms.
Now, as far as what's next, we hope in 2026 to release it at scale. I'll tell you, when we started our company a couple of years ago, we never thought we would put $100 trillion on the platform. So not in our wildest dreams. So busy right now, scaling it, hardening it, ensuring that it has all the protections that is worthy of the DTCC name behind it.
So DTCC is hoping that by 2026, they're going to have over $100 trillion of assets put into the crypto ecosystem. That's next year, and this is an extreme amount of wealth. Just think about $1 trillion. We're $35 trillion in debt. Imagine hundreds of trillions of dollars pushed into an ecosystem that's less than $4 trillion in market cap.
But then when we tokenize all that, you've got to create value for your participants. Having a token itself is great, but one would ask, so what? So we're leveraging a couple of things. One is working with the fintech community to be able to leverage a network of different blockchains so we can provide our clients with interconnectivity and interoperability so they can move these assets anywhere they want in a safe, controlled manner.
DTCC is specializing in issuing shares of stocks. Now, this is regardless if it's tokenized or not tokenized. All the central hubs are already tapped into DTCC. What's big about this is that they're going to finally be tapped into crypto based rails. So Currency was in the process of working with Stellar, and DTCC acquired Securrency. You can see, according to this World Bank document, that Securrency is building on the Stellar blockchain. But they also have interoperability into Ripple, Bitcoin, Ethereum, Stellar, and others. This move around tokenization is about market infrastructure.
Custody assets of the US market. We'll continue to do so. But our job really is to enable our participants to be able to do whatever they want to do in the space, and we'll continue to partner with them as we move forward.
The current stock market is built on leverage, and this is just borrowing against assets. So DTCC needs to have the infrastructure in place for their Wall Street clients to borrow against all the assets that they own. And this includes now crypto. And this is what is so bullish about all of this news is that it's all interconnected. I Trust Capital, the largest U.S. self directed digital asset IRA technology and service provider with over $7 billion in crypto assets on platform, has announced a first of its kind integration with Coinbase Asset Management to enable accredited investors in the CBAM managed fund strategy to hold their participations in tax deferred IRA accounts. This integration will debut with a CBAM managed Bitcoin yield strategy, which seeks to outperform the price of Bitcoin by delivering investors Bitcoin beta returns plus additional yield. Now, if you don't understand what that means, it's basically saying that they are catering to accredited investors for a Bitcoin option strategy in an IRA account. So these are more sophisticating trading type of techniques. What stuck out to me is that this is being offered to accredited investors. These are options in your IRA. So I think there's more news and more possibilities down the road with this type of integration. And these are just more techniques to take advantage of the markets. And I Trust Capital is offering these services bundled up for self directed IRAs. So check out itrustcapital.com/Darren. If you use that link, you can get up to $100 funding bonus just by using the link.
Technology. It's unrealistic to expect large financial institutions that through the years have spent millions and millions and millions on their technology to just throw it out and say, all right, like these blockchains are cool, we're going to go that way. So being able to integrate the old and the new is really job one. And a lot of the technology and the platforms that DTCC is bringing to market does facilitate that movement between, taking your tokens and being able to provide them to your participants and clients, if you will, through old rails, so your portals and so being able to marry the old and the new is critical.
Now, I mentioned that I did a video on DTCC earlier. This video was geared towards Finastra. Global Pay Plus was partnered with Ripple and other blockchain based rails, and they announced that DTCC was using Global Pay Plus for their payments rails. And this is what she's saying is that the old and the new need to be married together. So we're going to need to see integrations happening with the traditional banking world and the crypto world. As this happens, the names of the partnerships are going to get bigger and bigger, yet the markets are going to get bigger and bigger where there's going to have less impact on price. Now, I don't know who has had a stock market account in the past, but in the past, it was a very different system where you had to wire money from your bank to another account, and then you would actually have to pay $5 or $6 per trade. It was this really messy, complicated system that was quite frankly expensive. With all of these blockchain based rails, where it's the market infrastructure is changing behind the scenes. So this is going to allow these easy to use apps to plug into this market infrastructure and create things that are like Robinhood using every stock in the stock market, not just the US based market, but the global markets. Everybody will be able to invest in these global markets. And there needs to be a way to bring money from the crypto ecosystems into the traditional banking system and vice versa. Of course, as this happens, the markets get deeper and more liquid, and this gives more use cases to tokens that are paired against these deep liquid markets.
Our business. We've done it in small pockets, but now, like the time of doing experiments and doing proof of concepts, I think hopefully that's behind us. And now, as an industry, we just need to hold hands and try to push forward, and really test our conviction if truly these rails are the future of our markets, which I personally believe they are. But we need a lot more conviction, if you will, in the market to push it forward.
Sure, sure. As development has taken place under these big banks working with blockchains, we've seen cycle after cycle in the crypto world that aligns with the big banks adopting blockchain based technology and crypto rails. These new regulations that are coming are going to transform markets forever. We're going to see crypto rails adopted, and we're going to see banking transformed, and new models involving AIs for super smart contracts will take form. All these different use cases that you never even thought of will start emerging.
First thing is our aspiration right now to tokenize all $100 trillion in custody that we have. That requires a fair level of cooperation, collaboration with our regulators, with our market participants, and really trying again to export some of these standards that have served the U.S. market so well for decades to ensure that they're infused into the digital infrastructure.
So right now, Securrency is having around $100 trillion in assets that they plan on tokenizing. These aren't assets that are available in crypto right now. So These regulations are going to pass, and you're going to see DTCC start pushing out securities on their platform that are accessible to everybody in crypto. So they pair all these different assets to crypto, and people can borrow, swap, do everything that they do in crypto against these securities.
Secondly, we still have issues with scalability. When you look at a firm like DTCC, we settle $4 quadrillion in settlements a year. That's a lot of zeros. And we all know blockchain right now it doesn't have that scalability. So working through getting to a stage of hyper scalability is really important.
4 quadrillion in settlements. So what does that mean? This means that each year, all of the stocks that are day traded, invested in, bought, sold, all of this equates to $4 trillion per year if you total up all of these sales. Since this $4 quadrillion in trade is happening with equities, it's safe to assume as these equities come on chain, that type of liquidity is going to be accessible for the crypto world.
Need to custody traditional assets, in tokenized assets and crypto. And all of those combined, today the portfolios are still separate, right? Like you have a crypto portfolio, you've got a tokenized portfolio, and you've got a real world, just legacy portfolios. At some point, you're going to see them consolidate. So traditional custody and DeFi custody is going to need to be able to process all that to safekeep it, have, assert a good control location, strike a nav, strike.
For the longest time, the banks, Wall Street, they were gatekeepers to all of these products. These are financial products in nature, and financial products offer scale. They can offer scale to both consumers and to businesses. So, if businesses want to get big, they go to Wall Street and they do an IPO and they can borrow against their assets to grow their balance sheet. So, these are tools, what it boils down to. These tools are going to be offered to everybody in the world. It's not just going to be US consumers. For the longest time, US consumers and businesses have had an advantage. But still, it's not like we've had this great cutting edge tech while the rest of the world suffer. Everyone has suffered from outdated tech, and we're going to see finance unleashed.
The rest of all the stuff in the technology now is also changing it. If you look at the life cycle of your fund manager, you send a trade, it comes to the custodian, it gets reconciled, it gets priced. Blockchain is also allowing us to compress those cycles and do all that on chain. So there's going to be a lot of modernization, if you will, of these platforms as we move forward to handle that.
Ripple announced Ripple Prime that taps into Hidden Road as their prime brokerage. So as these securities come on chain, you're going to have prime brokerage and these different financial intermediaries that can take on leverage, borrowing, repurchase agreements. And this is what was behind the Hidden Road acquisition with Ripple and RLUSD. While looking into Securrency, I discovered that Wisdom Tree was offering Wisdom Tree Prime. Now, there could be absolutely no connection between any of this. However, I must bring up that JP Morgan was created tokenized infrastructure connecting Connexus, which is their cross-border platform, the Provenance blockchain, Ava Labs, Axelar, Layer Zero, and Wisdom Tree working on a platform that can take on people's home equity loans and give them collateral to invest in the stock market. Ripple Prime has stated that 300 plus institutional companies, 3 trillion annually across markets is settled.
Second one is back in April, we did something called the Great Collateral Experiment, which we've been able to provide a platform to our clients where they can use these tokens for collateral, try to facilitate the financing of any trades they so desire. So it's really giving these tokens purpose and value in the ecosystem. So that's where we're doubled down right now in working with various participants, fintech, big tech, to be able to build those rails in a scalable and secure manner, so we can hopefully facilitate and encourage adoption as we move forward.
Crypto protocols will be the infrastructure of the future, but also this is going to allow crypto a seat at the table to be just another asset that Wall Street uses for margin, for derivatives, lending, everything that you could think of. Now, think about all of the different applications that are reliant upon other applications, and these are all back end services. This isn't front end apps. These are back end infrastructure. So it is likely that we'll see all of these apps interconnected and using infrastructure that is common.
All those have been built. We're in the process right now of just testing the smart contracts, auditing them, soliciting user feedback. And in mid 2026, give or take a couple of months, we look forward to rolling that out broadly.
Excellent, excellent.
Securrency is currently holding around 100 trillion in stocks that are going to be issued onto crypto rails, and we're going to see the benefit of what $100 trillion in assets when it comes online and it comes into crypto rails, what impact it will have on different prices. And it sounds like we're going to start seeing this around mid 2026. There is around 124 trillion in global equities. US markets taking up 48% of the share with 60 trillion dollars. China coming up next with 15 trillion at 12%, and the EU is at 14 trillion at 12%, and the list goes on and on. I think the largest opportunities are when the US, China, and the EU starts coming on board. And then keep in mind, you can make sophisticated derivatives products based on these tokenized products, and then you could start tying them to AIs, ETFs, all of these different financial applications almost have a feedback loop effect on prices. But this also means the upside and downside. To me, this DTCC news is very optimistic about the next 5 years in the crypto markets. I think for the time being that these cycles will continue until markets peak and then go sideways. Investing is not about predicting the future. It's about preparing for it. Focus on risk management and long term value creation. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoyed content like this, please consider joining my Patreon.